What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you. So we have no more share dilution. You heard that correctly. We have completed the 43 million share offering. That is all in the past now. So there's not going to be any more dilution in the share price in the near future. So this is really big news. And in addition to this, we also have some very big fear, uncertainty, and doubt FUD being spread around these internet forums that we need to disprove in this video to show exactly what is going on. So we have a lot to cover in this video, so make sure you guys stick until the end. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks. Now, when we're looking at the chart of AMC today, we are seeing a massive spike in the share price. We are currently up, at the time that I'm recording this video, about 16%, and we are teetering right around this $12 mark. Now, we did go all the way as high as, I think, $12.38 today, before the time that I was recording, so that's the high that I have seen today. It could be higher after you guys see this video, but around $12.30 is the high that we have seen today out of AMC. Now, when we come over to the option chain, for this week, we are going to have a lot of options contracts expiring in the money, and this could be the cause for some sort of a gamma squeeze. Now, I have said this many times that I think that a gamma squeeze is going to set off the big short squeeze. Now, gamma squeezes and short squeezes are completely different things, and that is something that you guys need to understand. A gamma squeeze is essentially when the institutions sell these naked call contracts, they then have to go out and buy the appropriate amount of shares on the open market to cover all of the options contracts that they sold. So for every options contract, that controls 100 shares. So all of these institutions are going to need to cover all of these options contracts right here. This is going to be a lot of money being pumped into AMC, and this could create a positive feedback loop of the institutions buying a significant portion of AMC shares, pushing the share price higher, putting more options contracts in the money, and this cycle continues. Now, when we come over to the most recent Ortex data, we can see that over here, the estimated short interest as a percentage of the free float is now at 23.55%. And if you guys have been watching any of my previous AMC videos, you know that I really like to look at the Ortex data as more of a trend, because at the end of the day, we know that there are a lot of naked shares out on the market that have not been accounted for in all of these short interest percentage numbers. So I think that this number is much higher, but I basically look at the trends. Now, a trend that I also want to show you guys is that when we come over to iBorrowDesk, we are going to see something very interesting. So looking right here, we can see that at the current time, the fee, so the cost to borrow as reported on iBorrowDesk is 74%. Now, the reason why I like to show iBorrowDesk is because it gives you all of these different numbers right here. It's not just a one-off number that Ortex gives you, and you can actually track the amount of shares available to short. When we take a deeper look at all of these numbers right here, we can see that at one time this morning, we saw that there was 800,000 shares available to be shorted. At the current time, only 60,000 are available. That means that 740,000 shares have been shorted on the open market and sold, but we can see that this has not affected the share price of AMC at all, and we can still see that the stock is up now at 17%. Now, the short fee right here is basically a reflection of the supply and demand of the amount of shares that are available to be shorted. So I would expect to see the actual percentage right here get higher as the amount of shares that is available go lower. Now, we saw that a little bit earlier today when we saw this go from 800,000 down to about 300,000. We saw the cost to borrow go from 75.5% up to 85.2%. But when we saw the amount of shares go even lower, we have not seen that reflected in the actual cost to borrow. Now, That could be because iBorrowDesk is only going off one broker and we are not getting the full picture. But I would expect to see this fee go up to at least 90% throughout the day and maybe even next week. We have seen this hit 90% a couple of times right here. We saw it go as high as 90.1%. Now, when we come over here, this is going to be the really big piece of news that I want to talk about in this video. And then we are going to go over the massive FUD being spread around. So AMC Entertainment Holdings completes 43 million share at the market equity offering and raises 428 million in additional equity capital. So let's take a look at some of the details of the closing of this big equity offering. So when we come down here, AMC Entertainment Holdings announced today that it has completed its previously announced 43 million share at the market equity program launched on April 29th. AMC raised approximately 428 million of new equity capital before commissions and fees at an average price of $9.94 per share. Commenting on the capital raise, AMC CEO and President Adam Aron said, bringing in an additional 428 million of new equity capital will immediately buttress and fortify our liquidity portfolio. The additional cash raised puts AMC in a stronger position to tackle the challenges and capitalize on the opportunities that lie ahead. So this is very big news. We are no longer going to be seeing all of this selling pressure due to AMC dumping shares on the open market, and this is going to give AMC shares the opportunity to have these massive spikes similar to what we are seeing today. Now, when we look at the language right here, in a stronger position to tackle the challenges and capitalize on the new opportunities that lie ahead, in my opinion, there's two very important opportunities that AMC has ahead. So the first is going to be something that everybody kind of already knows, and that's going to be the grand reopening of our economy. AMC has come out and said in the past that they are looking to hire 10,000 new employees, and they are also buying new movie theaters. So this shows us that they are really in a position to grow, and they are expecting a lot of people to return to theaters. We have seen the box office numbers be absolutely amazing for some of the new movies that have come out, and I think that AMC is in a great position to take advantage of this reopening opportunity. Now, the second, I think that AMC is looking to actually come out with their own streaming service. Now, there's a couple of pieces of evidence that suggest this to me. The first is previously AMC actually entered into an equipment purchase agreement with the company Cinedigm, and Cinedigm is a streaming service. Now, the second piece of evidence that really suggests this to me is that at the current time, not a lot of people know about this, but AMC has something called AMC On Demand, where you can go on their website and actually rent movies directly from AMC. So if you guys have already gone out to the movie theaters, bought all of the snacks, watched all of the movies that they have to offer, and you still want to support this company, you can go onto the AMC On Demand website and actually pay directly to AMC to watch these movies. So the AMC On Demand platform shows us that AMC has the infrastructure capabilities to come out with a service such as a streaming service like Netflix, HBO. And the AMC executives also know that they have a very passionate group of retail investors that would definitely be in support of a service such as this if it were to ever come out. So that is going to be something to definitely keep a lookout for in the future if it were to ever happen, but it is still speculation at the current time. But they have also raised a bunch of money, and it's going to be very interesting to see where they decide to deploy this. Now, I also want to go over the massive FUD being spread around a very particular situation with reverse repos and if it is actually a bailout. So when we come over here to this article, the Fed has guaranteed $400 billion in 2 days. What happens on Wall Street? So this article is essentially saying that after yesterday's $181 billion in reverse repos, today another $209 billion towards 39 requesting institutions. Is someone running into margin calls that risk turning the snowball into an avalanche? Two clues: the biggest contributor to the record leap in inflation came from used cars, consumer credit, while the largest corporate bond ETF has seen short interest soar over 20%. A tip: fasten your seatbelts. The reason why people are blowing this out of proportion today is because there is such a big stress test happening with a couple of these institutions. But let's take a look at exactly what reverse repos are. So a reverse repo is a reverse repurchase agreement, as we can see here. It's the purchase of securities with the agreement to sell them at a higher price at a specific future date. It's essentially creating liquidity. Now, there's an example for this when we come down below. In a macro example of RRPs, the Federal Reserve Bank, the Fed, uses repos and RRPs in order to provide stability in lending markets through open market operations. The RPP transaction is used less often than a repo by the Fed, as a repo puts money into the banking system when it is short, whereas RPP borrows money from the system when there is too much liquidity. The Fed conducts RRPs in order to maintain long-term monetary policy and ensure capital liquidity levels on the market. Now, people are also saying that since these loans are only for 1 day, they are also saying that this is basically a bailout in order to make it seem that these institutions are going to be able to pass this stress test. But when we come over to the Federal Reserve Bank of New York's website, we can take a look at a lot of these different repo and reverse repo operation agreements, and we can see exactly how long they are for and what amounts that they are in. So we saw, as we come back here, 181 billion and 209 billion. Those are key numbers to look at. So when we come here, we can see that there's nothing submitted on this date, but yesterday we can see that 209 billion, and this was for 1 day, and the type of operation was a reverse repo. Now, when we come down here, we can see that on May 11th, there was a reverse repo for 181 billion, which we just saw previously, and that was also for 1 day. Now, coming down a little bit further, another reverse repo on May 11th through, or May 10th through May 11th in the amount of $175 billion. Again, a reverse repo. So this is not a one-off event that we are seeing the Federal Reserve perform. This is something that they do every couple of days, and the average, I think, for the amount of reverse repos or repos that we have seen over the past couple of months has been around 150 billion. Now, we can see here that this one is a 3-day loan, but we can see that this was on a Friday and it expired on a Monday. So 1 business day still applies. So even though we've disproven the FUD being circulated around the internet, that these reverse repos are the Fed's way of bailing out these institutions in order to make it look like they're going to pass this stress test, this does not mean at all that these institutions are not heavily over-leveraged at the current time and at severe risk of defaulting. When we come over to this chart right here, this is a chart that I bring up in a lot of my AMC videos because I think that it is extremely important. We are seeing right here in red the margin debt in the United States right now in the market. So the red line right here is actually inverted, as we can see over here. So when this line comes down, the margin debt is increasing. At the current time, the margin debt is actually at 822 billion, which is an all-time high. We are also seeing the leveraged loan default rate, which applies to this chart right here, is massively spiking. In the projections for this actual default rate over the next couple of months, it's just supposed to go higher. This kind of ties into my previous AMC video where I think that margin calls are going to come and it is going to crash a lot of the overall market. So that we'll see how it plays out, but I really think that the overall market is in for some very intense volatility, but I do think that AMC is going to be safe. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button, and if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a very profitable day, and I'll see you guys in the next video.